Hello everyone, welcome to today's US Open live webinar. It is Thursday, January the 26th. We're 10 minutes before US markets open. This is your host Nikos Zabouras, Senior Market Specialist at FXCM. Today we'll go through Tesla's strong quarterly results with record revenues. We'll also talk about the latest data from the United States that were released less than an hour ago, Australia's red hot inflation, and other things. Before, however, we begin, please read carefully through the risk warnings and the disclaimers, and then we will get started. Once again, please read carefully through the disclaimers, and then we'll get the ball rolling. Also, if there are any opinions, any questions, feel free to type them in the chat box, and provided that we have the time, we're gonna try to address again any opinions or questions. Feel free to type them in the chat box. Now let's go ahead and get started as we look at Euro USD. Before we begin with the technical outlook, let's go over the market themes. Markets have been somewhat choppy as they awaited today's US data and mostly tomorrow's PCE inflation, and they also gear up for a big week. Next week we have the Fed, the ECB, and the BOE delivering the latest monetary policy decisions. Now, in the most recent data, less than an hour ago from the US, we saw durable goods orders rising 5.6%, much better than expected, and a huge improvement for the previous negative print. And the current one, 5.6, as we said, is the highest since July 2020, so definitely very strong data there. Q4 GDP was the first reading, the preliminary annualized plus 2.9%, much better than expected, 2.6%, whereas the previous one was a little higher, 3.2, the final for Q3. And of course, we remind you that the first two quarters were negative in terms of growth. So definitely strong results from the United States. I believe mixed market impact. Again, investors also wait tomorrow's PCE inflation. Now, yesterday we had the Bank of Canada downshifting again to a 25 basis points hike, as expected, and brought rates 4.5%, the highest level since 2007. This is probably the peak for rates in Canada, as the bank now expects to hold the policy rate, again, to hold the policy rate at this level, if of course the economy evolves within its projections, and it also lowered its CPI forecast for the current year. Again, from yesterday news, we had another surge in inflation in Australia. CPI increased 7.8% year over year in Q4, which was the biggest increase since 1990. Whereas in New Zealand, things were steady at 7.2% year over year, just off the 32-year highs. Also had some geopolitical developments around Ukraine, Russia, and the war there, because the United States announced that they will be sending their Abrams tanks to Ukraine, and Germany also U-turned and agreed to send Leopard 2 tanks. So definitely some renewed heat there. And of course, we have the earnings season in full swing. We saw Microsoft yesterday disappointing with its guidance, whereas Boeing, the plane maker, posted another quarterly loss, but Microsoft was on Tuesday, not yesterday. And of course, Tesla in the latest results record revenues, strong results overall, was gaining around 9% in pre-market following those results. We have already opined on those on the Tesla report. Again, we say that it posted record revenues. We already knew that it had record production and delivery figures, but deliveries had sparked fears over demand along with some price cuts. But CEO Elon Musk definitely said that there is strong demand so far in January, and sort of assuades those fears. And we also got some news around the long-awaited Cybertruck. He said that he actually reiterated that production is expected to start around summer, although he downplayed the beginning of production, saying that volume production will be reached in 2024. Again, in typical Tesla fashion, the Cybertruck was first unveiled, in late 2019, and since then we have other competitors dominating this market, such as Ford and startup Rivian. So again, you can read more about Tesla's results in the FXCM market analysis web pages of your respective regions. Now, let's turn over to Euro USD. We said that there was mixed results in the strong data from the United States. The backdrop is that the European Central Bank stays hawkish. We have seen a series of official hammering home the message of at least one 50 basis point hike, and markets seem to believe that. Whereas for the US, both deciding next week, they expect a smaller 25 basis points hike, and we haven't seen any pushback against those expectations by Fed officials. The policy differential is supportive, and bulls can push for the next resistance, which is located at the next major one, in our view, at least at 1.10.6. However, the common currency has lost its vigor over the last few days, despite the constructive outlook, and a pullback towards last week's lows at around 1.0766 would not be surprising, but a significant reversal in sentiment would be needed for further and sustained weakness below this level. Of course, as we said, we expect key data from the United States tomorrow that Fed officials will take into account when delivering their decision next week. Now let's move to USD JPY. It shows signs of life after the recent lows over here. As the Bank of Japan did not double down to last month's surprise, it had then widened the target of the 10-year bond yields to 0.5%, but last week it retained that cap, disappointing some investors. Today, the IMF, the International Monetary Fund, urged further flexibility by the BOJ, and this helps the pair today, which trades in positive territory. We believe that, as we've said before, the road to policy normalization has opened, but it's hard to see any imminent and straightforward changes. We also need to say that there's going to be a change at the helm of the bank in April, so that we'll need to see how that will affect policymakers. Now, in terms of technical outlook, we said that the pair is currently constructive, and this sort of keeps the door open to arise towards this critical area here, 132.20, 133.05, where we have the 200 period EMA and the 23.6% Fibonacci of the 2020 high, 2022 low drop. But we can say that it inspires much confidence for taking out this level, which could open the door for further advance. The bias is clearly on the downside, and they look at the daily chart does not leave much room for optimism. We can see here we have highlighted a recently formed death cross. A death cross is when a faster EMA crosses below a slower EMA, usually larger time frames. Our preferred selection here is 50 days EMA and 200 days EMA, and you can see that on the daily chart. This is usually considered as a precursor of further weakness. So clearly risk on the downside, and there is scope for new lows and a test of this region here at 21.2635. So that's it for USD JPY, but again, the next leg of the move could be determined by tomorrow's data from the United States. Now let's move on to the Aussie, which jumped after the inflation, CPI inflation report from Australia. It actually sets 7-month highs. It breaches the August peak. And the reason for this positive reaction is that it reinforces chances for another hike by the Reserve Bank of Australia. Now, the RBA has stepped back has already stepped back for quite a few meetings now with small 0.25% rate increases, but does expect to produce more of them. And the CPI report definitely cements such expectations. So as we said, it sets new highs, and this puts this region here, 0.7283, in its crosshairs. But we are a bit cautious because if we look down to the relative strength index, we saw a bit of overbought conditions. So this could cause a pullback back to 0.7, but we need a strong catalyst for moves below that, and in general, the downside seems well protected. So let's leave Forex behind us. We're already 3 minutes into the US session, so let's turn our attention to the Nasdaq 100 here, and then we'll round things off with what we expect ahead. So yesterday, the index actually faced some pressure, but the daily Ichimoku cloud was supportive, and we believe that this helps the index to find some renewed strength and push for this region here to attack the December highs. But it may be early to talk for further strength, and the next major resistance at around 12,883 is still distant. Now, on the other hand, we wouldn't be surprised if we saw renewed pressure back towards the EMA 200, but definitely a significant deterioration in sentiment would be required for a breach that could pose the ascending momentum. So that's it in terms of technical. So now ahead of us, as we said, we expect the December personal consumption expenditures from the United States on Friday. The November headline figure was 5.5%, the lowest since November 2021, while the core at 4.7% year over year was the lowest since July 2022. As we already said, next week we expect policy decisions by the Fed, the European Central Bank, and the Bank of England. We'll talk extensively about this on our next US Open on Tuesday. Next Tuesday, we'll focus mainly on those upcoming central banks, offer a preview. And of course, we have a big week in terms of earnings next week. Big tech is in focus, starting with Meta on Wednesday, and we also have US automakers such as Ford. So we'll talk about that more on our next session. Again, we'll focus mostly on our next sessions on central bank activity ahead of their upcoming decisions. So that's it from me. Thank you for joining. Have a good one, and we'll talk again on Tuesday.